Happy Saturday, everyone. Here we are with the Note Show, and today we're going to talk about market volatility and note investing. And Dr. Ivan, this was the topic you suggested, so maybe you can explain what you're after today.
Hi, everyone. Thanks for having me on today, Greg. And what I wanted to discuss is market volatility versus note investing. A couple of weeks ago, there was a big headline in the news that a certain Japanese company had, in essence, cracked the code on establishing an AI model that was less expensive than what we had been led to believe. And this was news on a Thursday and on a Friday. And at when this news was released, the market was basically the stock market was closed. This unleashed a fury of news and speculation as to where the stocks that are involved in the AI race, namely Nvidia, Meta, Google, and other companies related to them, Broadcom, and what's the other company? All these companies that are in that space, they had led us to believe that we needed to invest heavily in infrastructure such as energy and even nuclear energy. So what that did is that following Monday, the market lost around $600 trillion in market value because of this news. And when all was said and done, Friday, Friday of that week, the market had gotten back to its original level, and most of the companies involved in that loss of capital were back to their levels on Monday at the market open. But this week, we saw again more volatility where those stocks were going up and down like a yo-yo. So what I wanted to address this week was market volatility and note investing. There are different risk profiles and investment dynamics with note investing and market volatility. Now, Rodney, have you had any experience with the ups and downs of the stock market?
Not really, because I'm not involved in the stock market. My investments are purely in the note industry, in the real estate, on the real estate side itself. But no volatility. I'm not seeking anything with a lot of volatility.
Mm. So market volatility, that's great. I'm glad that's your investment style. I have with some portion of my investment accounts are in the stock market. Another portion is in real estate and in note investing. But again, you have to have a very uh, what's the word I'm searching for? A strong stomach to absorb the news of the ups and downs of the stock market.
You can't blink.
You cannot blink. And market volatility refers to fluctuation in asset prices, which we saw a couple of weeks ago. And you see that in stocks and other publicly traded securities. And what affects market volatility? Economic data, inflation, GDP growth, unemployment or unemployment, interest rates that's set by central banks, geopolitical events, wars, rumors of wars, elections, policy changes, and market sentiment, investor confidence, and speculation. And what we saw these last 2 weeks, is that because of the news from the Chinese company, which I'm not going to name, everyone knows the name, that basically upended the narrative of the AI stocks. And these AI stocks, the primary one was Nvidia, which had been rising from, I think it was $20 to almost $200. It lost about half of its market cap, if I'm not mistaken. Okay, and if you are a trader, if you are a veteran of Wall Street, if you're a veteran of trading securities, it can create a profitable situation for you. But I would guess that 90% of the people that we know are not traders, and you have to have special training and specialized knowledge to take advantage of that. And I've actually seen traders that have had years of training, and what an event like this, which are called black swan events because they're very rare, been wiped out by these events that come out of left field, that come out of nowhere. Okay, and but again, with note investing, what it involves is purchasing debt instruments such as mortgage notes or promissory notes, where an investor earns returns through interest and potential loan payouts. So these are guaranteed interest payments, interest and principal payments backed by a real security. When you're investing in stocks, you own a piece of paper. Theoretically, you own a piece of that company and you have a say in voting for the various business activities of that stock. I'm sure that many of us that are listening have had a certificate a, sent to you by the company for proxy votes, and that usually involves voting for a member of the board or changes in policy issues where every stock company has to have this by law to their investors. Okay. What I like about note investing is that it is a stable cash flow. It's a predictable payment. There is no correlation between the stock market and the note investing. And you have, again, a collateralized security. It's backed by a hard asset, which reduces the risk of a total loss. That's why it's called real estate, because you can touch it and face it. Everyone needs a place to live.
Yeah, I agree with that. There's no real speculation in it, and like you said, no mere rumor will get it to go up or down. It's I like to call it contractual debt.
Contractual debt, exactly.
It's established. It's there. So we get it at a discount, so we make our money on the front end. Because we know what the exit strategy we're going to use to benefit on the back end. So,
So when you compare note investing versus the stock market, I think everyone should invest in notes, and there are people that cannot invest in notes, and because of their pension plans, or I'm sorry, pension plans don't exist anymore, because of their 401ks, they have to be invested in the stock market, and that is through Vanguard or through BlackRock. Usually, those are the biggest players, and I guess another player would be State Street Capital. So there is a lower risk factor again with note investing as compared to stock market. There is a market volatility involved, like we saw these last couple of weeks, and the return potential in the stock market is high. Those who bought Microsoft at whatever level it was, $10, or Apple, or even Tesla when it came out at $10. Right now, if you bought and hold, you'd be sitting on a good chunk of change as far as return is concerned. But with note investing, what I call it the rabbit or the hare comparison. With note investing, you get steady and consistent cash flow, steady and consistent return on your investment. Now, with stocks, you can get you have an advantage that there's highly liquid. You can sell a stock with a click of a button. You can go on Robinhood, you can go on any one of those online apps and sell, and literally within seconds, it'll tell you if you sold your stock or not. With note investing, the liquidity is a little bit lower because notes require a long time to sell or to mature. Is that an advantage or a disadvantage? I think if you take a long-term approach to investing, that actually works to your advantage. Again, with the stock market, there is a large correlation with economic cycles, boom and bust. Everyone here remembers the Great Recession.
Well, we don't remember it, but we know of it.
The great financial 2008.
Okay.
Oh, that one did the crash. Yeah.
That one.
That was the Great Recession, not the Great Depression.
The crash was good for people who wanted to invest in real estate
afterwards. But I remember when that happened, people were very nervous in investing in real estate. In my local area, there was a 4,000 foot square home sitting on 2 acres that was going for a ridiculous price of $80,000, but it sat on the market for about a year and a half because even I was scared to invest because I didn't know where the economy was going.
Yeah. It's
With,
I think one of the things about the node investing part of it, there's a lot of risk to actual real estate investing. Especially if like rental properties, you don't know. Like Bonnie's had 2 houses. I think she lost money on one, and the other one was completely destroyed by a renter. And so there's kind of horror stories. So the mortgage notes, to some degree, there are other hazards, but you're not dependent. You're not as quite as dependent on some of those factors, like trees falling into your property.
Right. That can happen. Yes, that can happen. Or someone driving into your property. I had a neighbor, she was teaching her daughter to drive, and her daughter backed out and hit my mailbox. It's a minor thing, but those things happen.
I retrieved my car from the basement window of a house one time.
You did?
Yeah, I had a 1964 MGB, and I was doing something on it, and I went in and I got a coffee, and I come out and I said, "Where's my car?" Anyway, there's a small crowd about a block down the road, and the car had rolled down the road over this retaining wall and poked its nose in the window, and they were watching TV, and all of a sudden there's this MGB poking through the window, right? And anyway, I came down there and I said, and they're all looking around. I said, "Oh, excuse me, that's my car." They were actually happy that somebody retrieve the car, and I paid $80 to have the window repaired, and the police thought it was funny. I think nowadays I'd probably be in jail, but they thought it was funny and helped me push the car back on the road.
So I guess the parking brake dislodged, and
maybe I didn't put it on or whatever. It was operator error for sure in one way or another, but anyway, I had another time in the same house. I had a old Mini, which is a terrible vehicle, and I had the brake cylinder on the kitchen table rebuilding it. And some of my friends thought they were kind of have some fun, and they lassoed the car and towed it backwards. And somebody jumped into the car and then realized the steering wheel was locked. And then he was sort of shouting for everybody to stop, and they just thought to go faster. And then he went to put the brakes on. Of course, there's no brakes at all. And a neighbor down the road had this old pickup truck, and he was looking out the window, and I think both of us were saying, "Okay, let's see if they smash the car into the truck, we'll get rid of 2 major problems." Unfortunately, they missed, but somebody stole that car, and I got it back. I was really unhappy about that.
Good.
Anyway, back to our discussion here. You said, like in real estate investing, I think if you look in the longer term, most things, as you know, if you bought stuff like Microsoft and IBM in the day and just kept on it, you'd be doing okay. But like you mentioned, NVIDIA had at one time had a pretty steady trend that it went up. You couldn't lose. You look like a genius by holding NVIDIA. And then it dumped. The whole stock market dumped for almost a year. Like it was just a downward trend, and then it's gone up. But it's really very, very problematic. Like I have my brother and sister-in-law used to day trade a lot. They've given up on that. They just basically they buy stuff that pay dividends. They might buy and trade a few things, but they're not losing sleep over it anymore.
NVIDIA is a stock of the moment. That's great. But actually, NVIDIA has been around for a while. And NVIDIA from basically 2015, I'm trying to get the stock in here. It had been going flat. It had been trading flat since from 2001 to 2015. And when they made a shift in their business model, that's when it went hyperbolic. I'm going to see if I can.
I'm looking for it too.
If I can share that stock. Let's see. If I can.
Yeah, everybody looks like a genius when it's going up.
And I have some experience in the stock market. Again, I've mentioned that in the .com era, when Qualcomm and a number of internet stocks were very hot, everyone looked like a genius because they would go up 100 points a day. Qualcomm.
Like you said, if people can stomach the roller coaster ride, they in the long run, yeah, they'll be. But it's those times when it takes those dips. Do they have the stomach to stay in it? And like with our notes, we know there's going to be that steady stream, like clockwork, coming into our accounts, and
that's true.
That's what I love about it.
Mm-hmm. That's very true. Yeah.
Yeah, I could actually. I've got an NVIDIA chart here. I'll show it.
So, like you were saying, there's no market correlation with note investing, unless something happens to the town that you're in. Unless you actually contractually, if a hurricane hits the house and the tenant can't pay, only three things can happen. Can you know what those things are? Those three things are, Rodney?
Well, if they can pay as agreed,
mm-hmm.
you know that. But like you said, if there's a problem, maybe they're going through maybe it's a couple, they're going through a divorce, or
mm-hmm.
maybe they've outgrown the house. They decide they need to sell early, so that's paying off early.
Mm-hmm.
And then the third one is, they can't pay for whatever reasons, and you have to take the property back through foreclosure. So those are the three scenarios that play out on the regular basis of doing note investing.
What I like about note investing, it is passive from the interest payments. Once you make that investment, that money hits your account like clockwork. You can achieve passive income from the stock market, but that involves buying dividend paying companies. But imagine how much money would it take to receive, let's say, $500 investment money from a dividend paying stock. I think you have to invest, or you have to have $200,000 in a dividend paying stock to pay $500 a month. I need to find that.
You actually you do need a substantial amount of money for it to come back. Like basically, if you're returning at 4% a year, you need, if you want a living income out of that, you need a lot. So
yeah. I think that if a person prefers growth and liquidity when they're younger, investing in stocks, despite the volatility, may be ideal. However, if you are older, like all of us here, if you want stability and passive income, note investing offers a reliable income stream with lower volatility, and it'll give you less blood pressure problems.
There you go.
But I think a diversified portfolio could include some stocks and some notes, so that it'll balance everything out.
Right. Yeah, diversity is important, really. And I trade crypto coins because it's fun, right?
Okay.
But my method is trend trading, but crypto, like as you mentioned, the stock market has something to it. Like NVIDIA, the stock prices. I'll just put that on the screen here. Has something to do with the market's perception of their how the company's doing and its potential, right? And so if you had got in early, it would you'd be doing pretty well. I was doing day trading right here when it was down, and you can't really see the trend. It's really hard to see the downward trend when you're in the minute. It's in the rearview mirror when it says, "Oh, okay, that's why that didn't work." So it's as you said, it's some diversity. If you've got something that provides a safe, 4 to 8% interest, and then you got some other things can really help.
Yeah, and I think like Dr. Ivan said, it is best to be diversified in your investments. I do have other real estate investments, commercial, multifamily, um, and I've done some venture capital investments. But I used to. I got involved in stocks early, didn't know what I was doing, and I kind of lost a little bit of money. But it was money that I knew that I had to invest, and it wasn't needed funds for any particular, and it wasn't a lot. So, and I still don't understand a lot of stuff with the stock market. So, I try to stay in my lane.
Yeah. So you, in your portfolio, you have a diversified portfolio, which is real estate, notes, and basically a version of notes. You're doing private lending, correct?
Correct. Right. Right.
Okay. I still during the internet craze area, I was trading options. I still trade options, but not as active as I once was. And it is a portion of my account. It's part of my non-retirement account and retirement account. There's a way to trade. It's called covered calls and selling puts. It's basically selling insurance on the stock that you own. And I tend to be a trend trader. Once it hits a certain level, then I'm out. But again, these last 2 weeks have been testing my metal as far as
here. I'm gonna, I've been trading cryptocurrencies, and most of them have been volatile, but in the last week, mostly falling. This one here, kind of all of them are doing this, right? Yeah. So they dump, and the worst thing here is that you come down here and it looks like it's turning around, and you want it to turn around, and so then you put a little bit more money in it, and then it comes down, and then it dumps like crazy, right? So I basically have less than $100 in play at the moment. I'm waiting for it to look like it's going to recover. But,
again, there's a way if you are trained to make money when stocks decrease, called short selling.
Yeah,
but you have to know the technical. You have to be very proficient in technical analysis and it's fundamental analysis. Be aware of the news.
You mentioned options. Options are probably the best way of doing that, is because you can hedge. Like some people have a system where they kind of hedge their bets. It doesn't matter what happens; they're going to come out okay.
Mm-hmm.
And that's where you can bet on it dumping, and you can bet on it gaining. So with puts and calls,
and that's almost like trying to time the market, kind of, sort of.
Well, yeah. Well, actually, I think what Ivan could probably explain it more. But I think his strategy is, it's really hard to lose on it. Like it's not really. I did some day trading of options, and it worked until it didn't, because I think there's probably only two people in the planet who really understand all the math behind how an option works.
Well, if you look at the option trading model, and this is interesting, the Black-Scholes trading model that priced options in the early 80s, they won a Nobel Prize.
Yeah.
They had their own hedge fund.
Yeah.
And like you said, it was successful until it wasn't. It was long-term capital, long-term LTC and long-term capital management. And they were riding high until a black swan event hit them. When the black swan event hit them, they lost all the money. They closed the fund, and it's in the history books. I think I have a book talking about that. So to become a consistent, I can't call it stock picker, to become a consistent options trader, you have to know, I have to say this, you have to have balls of steel. And those who don't have, those are the females that are watching this, you have to have nerves of steel.
Yeah.
And you have to hedge yourself. one thing that I did learn from trading is that you only trade the amount you can lose.
Yeah.
Let's say if you have $100,000 account, you only trade 10,000. That's what you only can afford to lose, and it'll wipe you out 10,000. With notes, I can have $100,000 note, and like Rodney said, three things can happen. I can get paid as agreed.
Yeah.
That's one. Two, they can pay me off, which will dramatically increase my return on investment. Three, if they don't pay, all I do is take back the note and the property and start the process all over again.
Yeah. And in most markets, the real estate is going to increase in value over time.
Mhm.
That's not guaranteed, but mostly so. That's because it's linked to a piece of property. Even if your deal goes south and you end up with the property back, that's not such a bad thing.
Yes.
And our note investing, we look at those situations and we recognize not only do we get equity in the note that we're purchasing, but we look for that equity already built up in the property too, just in case we have to take it over in foreclosure. So
yes, and even if
that's hedging our bets there.
hedging our bets, exactly. Even if, God forbid, the property burns down, you still have a piece of dirt.
Yeah.
That has intrinsic value. When what's that? There were a couple of examples that are escaping me. Stocks that have gone down to zero. What do you get when that happens? Or a stock goes from 100 to 2. What happens? You get a piece of paper. You get a stock certificate that's not worth the paper it was printed on.
Yeah.
You still have a piece of land has intrinsic value, and you can actually create a note on that piece of land and earn money on it.
That's right. Yeah.
So we had somebody on the show last year who's selling chunks of dirt in California, right?
Mm-hmm.
And the speculation that either it'll become a housing development or in that area, they're building a lot of solar farms and marijuana grow ops. So it's sort of, and it's a long play. It says it may be a while before a serious buyer is interested in it, but that's buying dirt. And and in many places, some places like lots of Texas where all that stuff's never going to be worth anything. but like any place on the coast, any piece of property is worthwhile because population is growing and there's not a limited amount.
Mm-hmm. Well, I have an example. I bought years ago a piece of dirt. It was 40 acres in Nevada.
Yeah.
And it was, I hate to use the term, pun intended, it was dirt cheap.
Yeah.
And lo and behold, 2 years later, someone offered me almost double what I paid for.
Yeah.
That's without me doing anything. And it was because there was an ordinance, there was a change in the zoning, and I had to look up what's happening there now. Some road was going to go through there, and they had inside information.
Yeah,
So,
for sure. Yeah. Yeah. Did you have it tested for nuclear waste?
no. No. That's funny.
Nevada's funny, like I've driven through Nevada a lot of times, and yeah, especially in the north, right? Like you can go for where miles where maybe there's one car on the horizon ahead of you and maybe one in the behind you, but there are places like all these things. Whoa, what's that? Oh, it's all military military ammunition stashes and stuff. All sorts of weird stuff in Nevada.
Could you pull up a chart? It's FLYE.
FLYE. Okay.
Yes.
FLYE.
Pull up the 5-year chart.
All right, 5-year chart. There we go.
So that's a stock that went from
6 months, 5 year, 5 year chart. Okay. Well, that's horrifying.
okay. So another example is ONGA. This is one area of stock investing that I definitely stay away from because very volatile.
Yeah.
It is a therapeutic, a biotech company. So if you look at the 5 year chart, its high was $30, and this year basically it is at 1 cent.
Hmm.
So these companies are dependent on products that they develop.
Yeah.
And what happens if they have one promising product and they can't develop another promising product, their performance goes down to zero. So what happens if you had $30 and didn't hear about the news, or their founder dies, or they get hit with a lawsuit? You lose all your money.
Yep. And that's the going back to the option thing, is your option when stuff dumps like this, it becomes unsellable. It's not that you can, like, if you're buying and selling stocks, like here, if you saw it coming down
Mm-hmm.
right there, you could sell out, right?
Mm-hmm.
You have to be not paying attention at all. Although this happened really fast. That was probably what, in
Yep.
a week?
But here is no. This actually happened in 2 days when it went
On
from
2 days. Okay. Yeah.
yes. So this actually happened to me. When I had a stock, I heard a rumor. I was on a board, and it said something's happening with this stock. Sell. I won't mention the stock. And I put in my sell order at a certain price point. But what happened when it opened? It gapped open much lower, so it blew through my order. So I lost a good chunk of money.
I lost quite a lot of money on Brexit.
Oh, you did?
I was betting. I knew that the UK pound was going to dump.
Mm-hmm.
I just underestimated how far it was going to dump.
Mm.
Like, let's say I can't even remember. I figured it was going to lose 30% of its value,
Mm-hmm.
that's what I figured, and it lost 50% of its value, and it
Mm.
took like 3 years to kind of come back to zero. It never came back completely, but it's
Did you stay in it until it?
yeah, I eventually sold out because I had to, but I sold at a big loss.
Mm-hmm.
So, but that was one of these things. I had the right idea that I knew it was going to be bad. It just was way worse than I had gauged.
Interesting. Very interesting. Very interesting.
Yeah. So yeah. So that's a really a cautionary tale there, Ivan, is that things can dump completely, and that happens. Like, if you're investing in Google or Nvidia or IBM or any of those things, Microsoft, they're probably going to be fairly stable, and the fluctuations will be minor. But some of these more speculative things, the market can change overnight, and it can be very
Mm-hmm.
bad.
Mm-hmm. Yep. But the thing is that investing in what's known as the Magnificent Seven, that would be Facebook, Microsoft, Google, Apple, Nvidia. Those 7 stocks have actually propelled the market to its highs. If you eliminate those stocks from the current market, the S&P 500 may have gained, I think it was 4% for the year.
Yeah,
because they're dragging the market by their coattails higher.
Hmm.
So
yeah. I'll show the Microsoft
hmm,
chart here,
hmm,
because that's so basically it's been what I would describe it is, for a lot. This is for over a year. It's been kind of sideways,
hmm, hmm,
but it's very unlikely that Microsoft's ever going to dump
right,
radically.
right.
Apple's probably the same. I think Microsoft. Well, Apple hit a all-time high recently.
Mm-hmm. I think they did. I would have to check. So here's the Magnificent Seven: Microsoft, Amazon, Meta, Apple, Alphabet, and Nvidia and Tesla.
Yeah.
So
so
those are the Magnificent Seven, and it harkens back to the 60s. There was a stock. There were 50 core stocks. They called them the Nifty 50.
Okay.
And those stocks again propelled the stock market higher. I'm looking it up here as we speak.
Yeah.
Let's see. Anyway, it was these stocks that were popular during the 60s and 70s that really helped elevate the stock market. So,
yeah.
anything else that we can talk about or harp on today?
Harp on. Okay, actually, here I'm going to show the 5-day chart of Apple, which kind of indicates what's happening. So, oh, holy moly! So there we go. So we've got some.
Wow. Okay.
Yeah,
That's the
the
5-day
last
chart.
5 days. And this looks really bad.
So actually, if you look at the chart, Greg,
yeah,
you look at the first day towards the left.
yeah,
It's at one level. It rises up, comes down, rises up, treads water, comes up, goes down, and it at the 5 days it started where it started. It basically is where it ended.
yeah, yeah. So it's yeah, it is. But a day trader just loves this kind of stuff.
Oh
Right?
yeah, exactly.
Okay. You buy when it's going up and you sell it when it's going down. I followed a fellow in Florida who was doing day trading, and they would trade. Well, he would just randomly he would do options, might do oil futures, might do Tesla or Tesla was, and they would sometimes basically he said most of your profits are done in the first 10 minutes of the market.
So he is a trader. That's what he does then.
A day trader, yeah.
Yep.
Okay. And then and the things like that, like Tesla used to be, and I think it probably still is. And many of these things is when the market opens, they either jump or dump about $20, right?
Mm-hmm.
So they would just have there. So he would be set up for either a buy or a sell, and
Okay.
and so if it dumped the $10 or $20, then he'd buy, and then it would up, and then maybe less than a minute later it'd be up in $20 and he would sell. So he said, and he said basically you can sometimes in the first hour you could do everything, and he suggested never trading more than 2 hours because you'll just end up losing everything you made in the first hour.
Actually, Tesla was one of those stocks that before Elon Musk became the CEO, it was a very volatile stock. And I remember, I think it was in 2019, it was at $16. And then within a year, it had gone up to $44.
Yeah. Okay. This is here. This is okay. Let's take a look. That's Tesla. This in one day.
In one day.
Yeah, and this is 5-day dump.
1 month.
This is a month. So they had a peak, and then 6 months. But you see, yeah, if you invested in Tesla early, you're laughing pretty much.
Mm-hmm.
But when was this? Oh, okay, yeah. Mid December last year, it was its peak, and then it's sliding now. And let's see what year to date.
It's down year to date.
Yeah. Anyway, there we go.
Well, compared to that, give me notes every day.
They give you notes. Yeah, buy notes.
I can sleep at night. Yeah. And you think about it, of the three things that typically happens with notes, and the worst in most people's eyes when they don't pay, for us investors, it's one of the better parts of it.
Yeah.
So
and I think we've discussed a number of times that you can take advantage of that kind of stuff, but most of the people who are involved are their intention is to keep people in their homes.
Yes.
right.
And to come up with flexible financing. And at the end of the day, even when things go wrong and people have trouble paying, you end up, Dr. Ivan, you have a case study that indicates you actually ended up making more money by having a humanitarian approach to the borrower.
Yes, that case, I was making 9.5% interest, but because the borrower couldn't pay on time with the added interest and fees, I wound up making close to 19%.
Wow.
19%.
And I was able to keep the borrower in the house. And again, it was a humanitarian. It was the right thing to do. That's the bottom line.
Yeah, because we're mostly about the cash flow. So
the cash flow, yeah.
It's advantageous for us to keep the buyer in the property if we can figure out a way that they can make the payments and not be stressed or cash strapped for it.
Plus the fact that I live in Florida and the house is in Texas. I didn't want to make that trip out of Texas to find a new tenant and fix the house and all that wonderful stuff.
There you go.
So it was a triple win. It was a win for me.
Yeah.
It was a win for my bank account. It was a win for them.
Yeah. Yeah. Unfortunately, Larry Hoffman couldn't make it today, but he's the master of the scratched and dented notes. So he thinks the uglier the note, the better for him because he makes more money on them.
Again, that's that specialized knowledge that you need, that you develop over the years, and there's a learning curve to everything. I tell Larry all the time, when I grow up, I want to be like him because he masters those scratch and dent notes.
Yeah, yeah, and I guess we should say that both that specialized knowledge is like you have different. I talked about having you've got a rental property and a tree falls on it or something, or your renter burns it to the ground. So there are all sorts of things you need to cover. With the note investing, maybe you guys can summarize what you need to know what you're doing. Need to know your numbers.
Mm-hmm.
And there's some insurance things probably that you have to factor in. And what do you want to just itemize what people need to know in order to be safe?
Yeah, I can't think of the term. What was it when we have to have forced place insurance on the property? Couldn't think of that. Yeah, but we want to make sure that the property has insurance, and if it doesn't, you put that insurance on the property because that's the only way you can cover your asset or your position in that note in that property. So, yeah, you got to have that as an investor.
Well, yeah, you have to have, again, the specialized knowledge. Rodney said you have to invest in the insurance, and you have to know the market also.
Yeah.
And if you're investing, say, in land notes, you have to know if there is a need for that property in the future. Okay. And if you want to get really, really technical, again, you have to have the financial literacy. You have to know the numbers. You have to know what risk assessment is and due diligence. You have to evaluate the borrower creditworthiness and his payment history. You have to assess the collateral property, meaning the actual property. You have to understand what loan to value is and your equity position. And because note is a not a liquid asset, you have to have a longer time horizon to invest in them.
Yeah.
Okay. And again, like alluding to what Rodney said, you have to have the legal and the contract knowledge.
Yes.
You have to understand the loan agreements, foreclosure laws, promissory note terms. You have to find an attorney to work with or a note servicing company. And just like anything, you have to have also negotiation skills to buy a note at a discount rate for better returns. You have to have, again, you have to know what your risk tolerance is
Yeah.
and diversification. And we've talked about the stock market. I think Rodney and I are on the same page. We're going to limit our exposure to the stock market. And you also have to know how to manage the note and collect on that. But then again, with that, there are note servicing companies that can do that for us, where we don't actually have to contact the borrower. I mean, with the property that I had the note on in Texas, it was all done through the third party servicer, and we already had set up the parameters of of a what if of eventual possible scenarios.
Yeah, and I know that you have some offers, Ivan, for people who are now horrified by all of that. Oh my God. Yeah, you have some offers for private lenders, where basically you enter an agreement, you're going to pay them 8 or whatever it is that your current offer is, and they don't need to know any of that stuff. You're going to look after all those technical details.
Yes, we
Yeah.
have notes available if someone is looking for passive returns. That we can handle all the paperwork,
Yeah.
and the person will actually collect a check on a monthly basis if they so desire. And
Yeah.
the returns could be anywhere between what we call 8. We think 8 is great.
Yeah.
Again, going higher than that, you do have a little riskier investment, but then there are ways to mitigate that risk.
Yeah. And Rodney, I think, do you offer something like that, or you invest in that way yourself?
Yes, I invest the same way. I look for anyone that wants to get a passive return so that they don't have to do all of that due diligence that Dr. Ivan just pointed out. We take all of that on ourselves because that's the experience that we have in investing in notes. So we take all of that on and make it somewhat passive for our lenders, a hypothecation partner. So, but I invest the same way as Dr. Ivan. I'm offering an 8% return on any investments that they want to get involved with me, and it's like mailbox money to them.
Mailbox money, yeah. Yeah. So if you're interested in investing without doing all of the due diligence yourself, contact Rodney or Dr. Ivan here. You're the note experience, Rodney, and then Dr. Ivan's the notedoctor.com. And if you probably you should connect to either of these guys, whoever, if you're on LinkedIn or Facebook or whatever, and have a discussion about the notes business if you want to get involved in the weeds, or if you just simply want to be an investor.
Great.
Anything else today?
Question: Who do you have? Who are you rooting for in the Super Bowl, which is tomorrow?
Well, I had to sign a waiver. I've been invited to a Super Bowl party, and so the condition was I had to cheer for his team. So it happens
Okay.
Kansas City. So
Okay.
I didn't have a problem agreeing to that, really. But I mostly look for a good game. I probably lean towards Kansas City, 51-49, but mostly I look for a good game. And in recent years, the playoffs have been mostly close games. Like I think Kansas City's won almost all of their games in the last minute or the last play this year. they haven't looked like that dominant most of the year, but they're winning still. And
well, the story has it they've been getting a lot of help from the refs. So,
well, yeah, some people like to say that.
yeah.
And this is Taylor Swift factor, right? So
I don't have a dog in this fight. I'm like you. I'm looking for a good game. Good. I don't normally watch commercials, but I'm looking to see the most expensive commercials we've had in quite a while. So
Really?
it'll be fun.
Yeah.
I was actually I was kind of hoping for Buffalo. Actually, I was hoping that Buffalo and Detroit would kind of break their decades of curse.
I think that would have been a more fun game to watch.
Yeah, like
I think so.
it's quite phenomenal. You know, it's interesting with like Tom Brady's personal record, right? Exceeds sometimes some whole franchises. Like he's thrown more yards and more touchdowns than some whole franchises have done in 30 years. You know, it's just really quite amazing. But Detroit's one of these ones was like a 30-year. I think last year when that was the first time they had won a conference game or something in over 20 years.
Who are you going for, Dr. Ivan?
Well, I don't like you. I don't have a dog in the fight, but I tend to root for the underdog, and the underdog in this game is the Eagles.
Yeah, and the Eagles have played really well. I think it'll be a good game. It really will.
Mm-hmm. Yep.
I hope so. Hope so.
Yeah, they like at one time I think the league was thinking about banning Denver forever being in the Super Bowl because they always got blown out for the longest time until they finally won one. And Buffalo was kind of the same too. They got blown out quite a few times.
They lost three. I think it was 3 years in a row. They lost.
Four.
Yeah,
4 in a row.
Four in a row. And that's
years.
a pass in itself. I'm like, wow, heartbreak 4 years.
Yeah. Yeah. But I like the NFL. I really enjoy the games. I got my brother hooked on it now. He never used to watch it now, and now he doesn't mind. I was traveling through the US years ago, and it happened to be when Indianapolis, New England, and Dallas, I think, were all headed for perfect season, and they didn't start losing until they started playing each other. So, but yeah. I sometimes I was a Tom Brady New England fan, and I have a friend from Boston, and I told her I says I think you and I are the only people west of the Mississippi who cheer for New England, and she says no, New England's the team everybody loves to hate.
That's true. That's true.
Yeah. Well, you guys, I hope you enjoy your Super Bowl watching and your families or friends. I will be in front of the boob tube too at that time. So
yeah, we're going to a sports bar.
Oh, okay.
Oh, okay.
I think the people I'm with are non-drinkers, so I'll probably be drinking excessive amounts of root beer. But there we go. It'll be fun.
Okay.
Anyway, it's good talking to you guys, and talk to you later.
All right. Thank you.
Thank you.
Bye.
Bye-bye.